Okay, this is the dollar. Nothing has, the euro dollar. Nothing has changed. To be honest with you guys, I mean, nothing really has changed in the way that still it looks corrected. It looks within the channel. It breached the channel a little bit to here, but it bounced. And I believe that it's going to test 139 sooner or later. That's the 50% retracement of this decline. But what it did from here was 1, 2, 3, and then a test or a print about just at the high 38, 37 is for sure the 139 is going to happen, because that's going to make this a three-way move. As of right now, it can be nesting, which is super bearish, and needs to be seen is this a nest or what it is to the downside. But like I say, nothing other than wait. And I believe seeing this is very, I mean, I know, and I put a count right there early today when it was showing like 1, 2, 3, 1, 2, 1, 2, 3, right here, I believe, 3, 4, and a 5, like a type of leading diagonal A-way, something like that. But that's 1 in a million that that's the case. But most likely the euro, I mean, it's like everything. If you look only at the euro, you can get confused and see many things. But when you look around and you see multiple pairs, in my view at least, it's very clear what the intention of the market is, which is nothing more than another leg of or risk coming to the market. So what we like is buying the dollar. Every time that you see the dollar to be sold, you need to buy it and trying to get the best price available on the dollar. That's my opinion. That's what I believe which the trader should be doing. This is questionable, so nothing to say too much. Now, a next level of interest, it depends how you look at this. Because this can be seen in 20 different ways. It can be seen like A, and then A, B, C, a flat B, and a C, and then this is W. And then from there, A, W, S, and then you got A, B, and a C. It can be seen many ways, in my opinion. Can be seen many ways. It can be seen like we presented in here, A, B, C, W, S, A, B, C, a biggest W, and then S. I mean, it can be seen any ways. If this is the case, and then you're going to look from when S, or Y, I'm sorry, equal A, and that happened at 29.44 area. That's one of the case. If this the other, and then all you need is the S way, the Y way of Y, or the C way of Y, you gotta mention from here, and it comes around 138.90, 139 area. So most likely we're gonna see 139 on the euro dollar, in my opinion. Now, I'm not looking at the euro dollar that much. Like I've been telling Zach since yesterday about this pair. It's the Singapore dollar. And that's the way that I'm looking at it, to be honest with you guys. This is the way that I'm looking at it. This is the pair that, in my humble opinion, is giving us the clue of what's coming. Is this pair. Let me tell you guys why. The Singapore dollar, if you guys know, we closed the trade today in the morning around this area for about 70 picks positive, because we were more positive, but I mean, unfortunate was on the London session. When I wake up, I saw the trade, and it's better because it did exactly what I was expecting, which is it trade in favor of the dollar right there. Now, what I see in this pair, very simple. I see 1, 2, 3, 4, 5, very vertical. At that moment, you question the decline in some degrees. You question the decline. But from there, now it looks very clear that the water 5, the recovery looks corrective. And that's all it matters, guys. That's all it matters. That the recovery in the Singapore dollar looks corrective. So what does that mean? That means that another leg of US dollar weakness should happen. Now, if you're looking at the euro only, you won't draw this conclusion. Exactly. That's what I expecting. That's why you see that we flat. We have two trade waiting. We have two trade waiting, but we flat at the moment, Raji. Why? Because we enter right here, right? Around 26.30 right here. We were out 100 picks, but I won't let the market eat the profit. Now, this is not as simple as, and it makes it look sometimes. Because if the high this morning is the 50% retracement of the previous fives right there, if you notice, this high is the 50% retracement, right? Now, you need to get into the structure of the recovery, which is corrected. This is telling me the 139 is going to be traded on the euro. And I've been telling Zach since yesterday why I think so. Look, this is very, very simple. Let me go small here. You can count here 1, 2, 3, 4, 5. You see the divergence on the fifth way? So it's a 5-way move. Now, what you got from here is you got 1, 2, 3, 4, 5. Perfect. After 5, it comes a 50% retracement, and it comes an equal X right there at the top. Or this can be a flat. I remember it was a flat. That's why it was equal left from here. My bad. You see? Equal left there. So technically, doing the labels, what you have is A, B, C, and then that's become W, right? And then you have to the back A, B, C, and that become S. All right? So you are right there. You got 3, 3. And then it looks like right here you have A, a B, and a C. Some degrees right there. Now, that can be one case. It still can allow another high right here, and then becomes 1, 2, 3. You can notice right here, you can see right here 1, 2, 3, 4, 5. I mean, if it makes a new high and then become a flat B way, no matter. But at the end of the day, at the end of the day, is a corrective three-way, because the first leg right here is correcting in nature. You have three ways. So you have three backs, and then these two that went to the 50% of this leg and the equalness from here. So most likely, one second, because I want to see the first A right here, because I can count 5 swing here. 1, 2, 3, 4, 5. Yeah, you can count it too. 1, 2, 3, 4, 5. Let me go a little small. 1 second. It's right here. From the lows, you see 1, 2, possible 3, 4. Oh, it did. If it's a 3 here, 1, 2, 3, 4, 5, 6, 7. I see 7 swings right there. If this is a 7 swing, and then that means that A was a 3, and then means that you're gonna get another high right here to around 127.66, 618 exactly. You're gonna get another high to around 127.76. That also should be the 618 of this one. You see, about 127.70. And then, but what it's telling you there is very clear that this is a corrective structure. Agree or not? That's corrective there. If this is corrective, that's telling me that either from here or from here, the US dollar is gonna get weak, because the US dollar is the leading pair in this pair, the leading currency in this pair. So let's say that go to 27.76, and then the area around 25.60 is the one that is going to be in place. And I've been counting in this, saying yesterday, I've been telling Zach again, I say the same. So technically speaking, that's what I see. And that's why I don't want to take long US dollar position yet, because I know that eventually it's going to break even to us, or it's going to stop out. Depends where you put the stop. I would rather be patient, because I know that eventually this pair is going to trade lower. Now, we are waiting here at the 618, 25.60 area, and we add at the 25 and at the 24.70 against a stop here, looking at least for 130, 132 area in this pair. So that's what is telling me what's going to happen right there. Now, oil is very weak. So it's a catch-22 when it comes. But for me, this is the technique, the way I trade is this. Because I don't believe in market correlation. I believe in this. This is the clear fight in the whole market. And this is another clear fight in the whole market. And this is correct. So the market is telling me, don't rush the dollar long, because you can get burnout. That's my humble opinion. And it makes sense. I mean, if you take a look at a pair like the Aussie dollar, look, textbook right here on Aussie. What you got? An A that happens to be a three-way. What you have? A, B, C to the 618, and eventually Aussie dollar is going to go to around 105.28, in my opinion. That's where Aussie dollar should trade sooner or later. That's when the Aussie dollar should trade sooner or later. So, and like that, I can point you guys out a bunch of pairs that have the same path. Look, the New Zealand dollar. Same thing. It goes the clear 5 ways. You got an A, a B, possible, and a C, and or maybe it did A, B, and 1, 2, 3, 4, 5, and a C, but it looks like the 80-23, 80-75 should be in place. You know, so when you see those type of pairs asking for more deeper correction, you can start selling the dollar against any one of them, because believe me, guys, everything is correlated. I mean, in times, maybe one pair turn early than the other, maybe half a day early, or I don't know, a day early, but at the end, when the dollar is going to get strong, everything against the dollar is going to get weak. That's how it works. Doesn't work another way around. So that's what I like. My message is, if you're going to become a dollar bull, you will rather wait, steer a little bit before attack the dollar, because I don't even think that the dollar as a dollar is still in the phase of being completed into the correction. Let me show you the chart of the dollar. And I'm almost convinced that the euro is going to go to 134 sooner than everybody knows. And from there, the euro probably is going to bounce again and surprise almost everyone again. Look, to get things worse, one second. To get things worse, we were counting in copper. If you take a look at this pair, it did a 1, 2, 3, 4, 5 swing from the top. Exactly, that's bearish. And then it did 1, 2, 3. Yesterday, we were right here and we say, okay, it can break down. What it did was a 3 ways lower to the 76.4 of the W. What it's telling you is ABC higher, meaning higher risk. It's clear. And we wrote it early on the overview that every pair was showing the same path, a double zigzag in risk as a correction, in my opinion. That's what everyone is showing there. Now, oil still can be a toss, and you have to play the more aggressive of the two counts, which is the ending diagonal. Oil looks very toppy. It looks very toppy right there. Let me open it for you guys. Let me put the 60 minute. That's an ending diagonal there. Looks like I can count 1, 2. I can count like 1, 2, 3, 4, 5, 6, 7 swing, most likely here, of 5. But well, it looks like a 3. The same right here, biggest correction in the middle, 3. And then probably a 4 and a 5. I was waiting for 95, 94 to end. And then that looks very toppy. Maybe oil, it drop or does something like A, B, and make another left and risk. But oil looks very toppy. And I think the momentum lacking right there is unbelievable. If you put, let me put, look, if you started from here in a proposal ending diagonal, you're going to see that this is the higher rate on the RSI, and we are getting divergence. So oil is going to drop very soon. And then that's the thing is how you see the dropping in oil related with, because oil dropping means automatically US dollar strength. So you got to take that into consideration. And then S&P, also looks like it is in a gang of double trip, something like A, B, C. I mean, this is A higher degree, 3 backs, A, B, C. This is W, and then a clear 3-way back, and then higher, lower, and don't get surprised to see the S&P have, I think that the risk trade can have one of those risk trade. It tested the 618 twice, and it was rejected. Somebody asked me today that the euro, every time that it touched 138, it was rejected, and that's correct. But I've seen it many times, and I know many of you seen it again, that something happened, it passed the 38, and then like in the news, like in a spy higher, and then it's rejected from a little higher level. It looks like S&P easily can go towards 70, but this looks correctly compared to this. I mean, it looks very correctly compared to this. So I'm expecting at least another leg down or a B-way triangle in the S&P, one or the other. And then the dollar as a dollar, look at the structure. You got 1, 2, 3, 3 backs, and then 1, 2, 3, that's A or W, 3 backs to the 76.4 to the peak right there. And then what you're expecting? Dollar winnings. It's clear, at least in my eyes, it's very clear. At least in my eyes, very clear. It can have like a type of, if this was a 3 backs here, this needs to be a 3. It looks like it was a 3 here. Let me put the candles 1 second. One second. Look, this is a 3 wave. 1, 2, 3, 4, 5, 1. Right here. 1. And then It looks like it did a small triangle in the middle there. And then 1, 2, 3, 4, 5, something like that. There should be equal legs. You see? It's amazing. Look at the equal legs how they sold it. But well, it looks like 1, 2, 5. And then most important is that this is on the 15-minute chart. From here, which is the last significant low that you have, which is 38.70 on the euro, it looks corrected to the upside. No way that that's a nest. It looks like it did 1, 2, possible 3, 4, 5, 1, 2, 3, and another 5. This looks to be a 3 backs to the 76.4, I believe it is. And then if this completed here, it's gonna go in lower again. Yeah, I'm gonna take a look at CAD now. But the most important thing is that from here to here, you have a well-defined three-way swing. A, B, C, W, S, A, B, Z. So a well-defined three-ways move. Look at the RSI, a well-defined three-way move right there. So I'm expecting lower price in, I'm expecting lower US dollar to around 76.20 and bouncing from there. Why? That's how I see it stand right now. Why that area? Because is when C is gonna equal A and it's the 50% retracement. That's the same as 39.20 on the dollar, on the euro dollar, guys. Now, let me get back here and show the CAD. They were asking me about the CAD. Let's wait. Dollar CAD is very interesting, Ryan. I'll tell you why. Because dollar CAD can be leading the path and showing the real phase of the recovery. Look, still you have to believe that the nest can be encased. You cannot argue with it that the nest can be encased. Now, if that's the case, the most logical path is like a flat, and there is nesting here to make a move to the downside against this low before going higher. That's the bullish one. Now, that's the most bullish oil. There is an alternative that we present this morning, which is calling for highest price to around 103.50, but corrective. Let me show it to you right here. Is this one. It's when you have from the lows, you got W. It means that you're going to get more downside. And you have, remember, all you have from here to here, there is three ways. That's why I was screaming last week to get another high here to complete the 5. It was denied. And then when he did the 5, it was in three-way. So this low is the 50% retracement, I believe, of this move. You have A, B, C, W, S, and then you're gonna end A, B, and another leg down. But at the end of the day, it's gonna prove corrective around this area, either 102.73, 103.64, and it's gonna trade back and trade lower again. Dollar CAD is getting very interesting right there. And that goes with the count in oil when oil is in the flat B way in some degrees. But I would rather see the nest, but it's not that clear in my opinion. The nest is not that clear right there. Any other pair, guys? Any other question? No, I like US dollar Windex. I believe that before any strength in the dollar, most likely is going to be some Windex, in my opinion. And but it can be a minor US dollar strength, because remember, everything depends on the Singapore dollar, what he was doing in the first leg. If the first leg out of the correction was a 7-way or a 3-way, then the C-way of the Y-way, there you go. That should be then also, let me put it to you here. Technically is this act. You got A, B, C, S. If this recovery here, it was a 3-way, and then you have W, S, and then you got A, B, and can be a C to 27.70 before lower. That's going to take the euro to around 136 at 60 area and bouncing back. You follow me now? That can be the scenario when right here the CAD makes another high to complete the A-way of Y and then lower before higher. Everything is possible, to be honest with you, but I think in general the US dollar is going to get weak before getting strong, in my opinion. For the euro, should be something like this. Very simple. It goes, let me see. It goes something like this. From here, make a short-term recovery and another low to look for the 76.4 of this whole retracement that comes around 36.70. And then you make this a 5-way move when you have 1, a flat 2, a 3, a 4, and a 5. You make a 5-way swing here, and then you have a double zigzag to around 36.70, and then in that case, you're going to have a fast move higher in Z. You see it? In other words, it goes like this. People asking me, and I keep telling you guys the same, corrections, they're always tricky and hard to label. Very hard to label corrections sometimes. Because people get confused into all those double zigzag, triple zigzag, something like this, right? A simple AVZ, believe it or not. This can become a simple AVZ. When you have 1, 2, 3, and there is nothing wrong with it. 4, and then this is 5 when you have 1, 2, 3, 4, 5. This is a clear 5, and then this is kind of questionable, but you can put it like a 3, 3 flat with a flat on the 2, and then that being the case, then the euro against, if you go to 36.70, look, it's gonna go, the equal less goes up at the same number as the 50% retracement. That's how it is, my good friend Zach. Everything, and then right here you have ABC, and then right here you got W. This is S at the top. The height is around the 618, and then he's gonna look for the equal legs down here. Comes around 36.30. Depends if you look at it like this, and then this low look, the low on Friday, is the 618 of the whole move to the pit. Yesterday tested again and bounced, and most of the time when that happens, it can go down and test around 36.70 area. A small time frame from today high, it looks like it did 1, 2, 1, 2, 1, 2, 3, 4, 5. This is possible. You close a cycle here. 1, 2, 3, 4, 5. You close another cycle here. 1, 2, 3, 4, 5. And then you close another cycle there. Now you should see this pair recovering to around 37.78, 37.70. Sometimes now and later in London, I don't know. And then probably it's going to be thrown to the downside. And then here we go again. Because from here, what you have what it looks to be. Remember, this was very questionable. And then it looks like it did a three-way move here on the C-way. And I remember this was kind of questionable. Look, let me go small so you guys see what I mean. You see, this is the drop on Friday. This is the drop on Friday. This is the one on Friday, right? No. It's right here. It looks good at the moment as a 5, but it keeps doing some lows. I don't see divergences, so it's questionable. And then it did 3 ways back. To the 76.4, to the peak, or this let down. You see right there to the 76.4. And then this morning, it dropped also questionable. It looks like another 3 ways. I believe it was to the equal legs, to the pit right there. So technically, it did a three-way move right here to the equal legs, to the pit, and another three-way move to the upside. 1, 2, 3. I mean, too many threes, you need to start looking to see if it's in type of developing like some type of triangle there. But I don't see that triangle. DV was telling me something, but I don't see it. But I think that the upside is corrective as of right now. Look at how slow that thing is. It's painful to be on the market today. Any other question, guys? Any other pairs that you guys want me to show you? Aussie yen. 1 second. This is on the 4-hour still. Same scenario, showing incomplete correction to the upside. I still believe that we have more upside to around 81.20, 81.80 before any downside in this pair. Same with Aussie, 105. In my opinion, it's going to get there. Look, very similar to, I mean, this is questionable right here as a 5, even though the RSI is showing very nice structure as an impulse, but I see 1, 2, 3, 4, 5 swing and agree, but also I see 7 swing in the last leg, so it's very questionable. But what is not questionable is A, possible flat B, and higher to 82 area before any significant move to the downside. That's what I see in an Aussie yen. Any other pairs? It's the same for everyone. I see the same structure to everyone, and I see the dollar weakness happening. I think that tomorrow most likely is going to be one of those days that the market goes with a risk and then fade the risk. But we believe that a move is close to happen in favor of the dollar. But also believe that before the dollar gets strong, most likely it's going to get weak, at least in my eyes. Any other question, guys? Euro pound also is very interesting here. Look, Euro pound, clear 5, but the recovery looks completely corrective. A, B, Z, W, S, I'm expecting a move higher in the Euro pound to 86.93 area before going lower. That's what I like right there. Cable, we like a lower too. Yes. We like cable lower too. But still I see 161 easily. I still see 161, 161.20 in cable, to be honest with you. Let me show you cable. I still see that cable is going to test on the B way, the 618, the 76.4 of the previous decline. If you go small, it looks like most likely is like this. A, and then B, and C to complete 3 ways down. And then from here, 1, 2, 3, 4, 5. And there comes cable with the ugly structures. And then it comes from here, and maybe this is a 3-way, and then it goes 1A, B, and it comes with cable, one of those ugly structures. But at least I like the idea that 71.31 or 61, on 61, I'm sorry, is going to top. That's a good trade to the downside against 71.76. Because if the market turns in favor of the dollar, then cable is going to drop very hard in a very short time right there. My opinion. Any other pair, guys? I think that we have covered everything. I like the euro to around 37 minimum, 37.70. If the second scenario, when the euro is gonna get sold against to around 36.68.70 and bouncing higher from there, it needs to go higher now from current levels to around 37.80 area, and then lower back again. It's amazing how this market is up and down for the last, it's going to be today around 7 days. Look, now it's going higher, right, Zach? Been telling you. It's amazing the manipulation that this market has, guys. Amazing. And it's amazing how Elliott Wave rules. And I don't know how you're going to trade if you don't know Elliott Wave, between you and me, guys. I mean, because at least Elliott Wave, like I always say, always give you a nice idea of where your risk is. That no other type of trading is going to give you that. Like right now, you're going to set the euro. You need to know why you're playing with it. But if you want to buy it, you knew that your risk is right here. Because from there can open a new leg to the downside. I mean, who else is going to give you that? Who else? Nobody does. You agree, James, right? Louis, or you guys? Nobody does. And now it should trade higher. There's still a chance of the leg down extending into a double because, yeah, because you see 3 ways here, but otherwise it should trade higher. And you see a 5 ways here that it can create you see a 5-way here that I can create the next leg down. But like I say, look, I've been telling you, it looks like if you're gonna go down, need to turn down from current low, from around current levels, 78, 67, and then it can go down to another leg to here, and more craziness to the market. But it can go straight out in 3 ways. That correction can be labeled in many ways. Luis, which one you want? Which one you like? I'm sorry. Like this, or is it regular ABC? Because this can be here now. Yeah, that's the issue. That's true. That the more data you get, and we've been saying that since last week, the more data you get, the count is changing. Happy to wait. That's the word. I would rather wait and sell it around, and start selling it around 139. And when I see, this is how you guys do it. Look, this is the Singapore dollar. The clear structures are all. As far as this low is there, you guys cannot buy the dollar, because this is corrective, and most likely the dollar is going to get into this area. Now, when the dollar get into this area is when you need to start saying, I want to start buying the dollar. But you have a defined risk also here. So, you know what I mean? That's how you trade this market. That's why we always say, if you trade only one pair, I guarantee you that you're going to lose money in this market. You need to correlate it then. Any question, guys? 2 p.m. I need to work on different projects that we're doing. I hope you guys enjoy the video that we did over the news on Saturday, I believe it was, on Sunday. So you guys understand now that the news do not matter what the news goes. Now, right here on this pair, a take or 2630 area is an open door. It's an open door to the lowest price, and we're gonna buy it again around here. Okay, guys, no more question. Leave it there. Go talk to you guys in the room during the day. Thanks, guys.